Your savings account is silently stealing $400 from you every single year, and the bank wants you to think it is normal. The average national savings account interest rate right now is 0.43%. The top high-yield savings accounts pay between 4.3 and 4.8% on a $10,000 balance. That gap is exactly $437 per year that you are giving back to your bank for absolutely nothing in return. Stay with me, because the third reason I am going to show you for switching is the one that finally convinced me, and it has nothing to do with the interest rate. Quick reminder, this is not financial advice. It is for educational purposes only.
Always do your own research before any money decision, including reading the deposit account agreement before opening or closing any account. Here is the simplest math that should make you angry. The big four banks, Chase, Bank of America, Wells Fargo, and Citi, have been paying somewhere between 0.01% and 0.5% on standard savings account for the past 2 years, while charging average APRs of 19 to 24% on credit card from the same customers. They borrow your money at 0.5% and lend it back to you at 24%. That is a 4,700% markup on the same dollar bill. You're subsidizing their entire business model. Reason number one to switch is obvious: the interest. A high-yield savings account at 4.3% versus a traditional savings at 0.4% on a $10,000 emergency fund earns you $437 more per year. On $20,000 is $874. On $50,000 it is over $2,100. This is not a small move. This is hundreds to thousands of dollars per year that just appears in your account for doing literally nothing except keeping your money in a different place. Reason number two is just as obvious: fees. Traditional banks charge monthly maintenance fees, overdraft fees, paper statement fees, wire transfer fees, ATM fees if you use an out-of-network machine, and minimum balance fees if you drop below an arbitrary threshold. The Big Four extracted $12.8 billion from American consumers in overdraft fees alone in 2023. Modern high-yield savings accounts charge none of these. Zero monthly fee, zero minimum balance requirement, zero overdraft fees. Many of them rebate ATM fees worldwide. What's the highest single fee your bank charged you this year? Drop it in the comments. I want to see the worst stories. Reason number three is the one that actually changed my mind, and it has nothing to do with interest or fees. It is about how quickly you can move your money. Most traditional savings accounts will let you make 6 withdrawals or transfers per month. After that, they charge an excessive transaction fee of $5 to $15 per movement. They will sometimes downgrade your account to a checking account if you go over the limit too often. Modern high-yield savings accounts have eliminated this limit entirely. You can transfer money in and out as often as you want. There is no penalty. This matters more than you think. When your money is hard to move, you do not deploy it. You do not pay down debt. You do not take advantage of sudden investment opportunity. You do not bail yourself out of a small emergency without resorting to a credit card. Friction kills good financial decisions. Removing friction from your savings account is one of the most underrated leverage moves you can make. Now, I have to address the question I get on every video about this. Is it safe? Yes. All the legitimate high-yield savings accounts are FDIC insured up to $250,000 per depositor per institution. That is the same insurance as your traditional savings account. The difference is purely in the technology and the cost structure of the bank. Online-first banks like Ally, Marcus by Goldman Sachs, Discover Bank, SoFi, Capital One, and several others have lower overhead costs than physical branches, and they pass those savings back to you in the form of higher interest rates and fewer fees. There is no catch. Here is the move I would tell my younger self to make on day one. Open one high-yield savings account. Use it for your emergency fund and any cash you do not need immediate access to. Keep your traditional checking account if you need physical branch access or you have direct deposits already set up there. Link the high-yield savings to your checking account. Transfer everything above 1 month of expenses from checking into the high yield. Set up an automatic transfer of any remaining cash above your checking buffer every payday. Within 30 days of doing this, 3 things happen automatically. First, your money starts earning 10 times more interest. Second, you stop paying ridiculous monthly fees. Third, the friction to actually deploy cash for opportunities or emergencies drops to zero. You did not change your spending. You did not earn a raise. You did not start a side hustle. You just move your money to a place that does not silently steal from you. The one thing I want you to take away is this. If you have more than $5,000 sitting in a traditional savings account at one of the big 4 banks, you're voluntarily giving up between $200 and $1,000 per year. Moving that money is a single hour of work that pays you for life. Watch this next video for the exact account opening process I use to set up a no-fee high-yield savings account in 11 minutes from my phone, including which one I ended up picking out of 6 candidates and why.